Hi, welcome Ranjit Singh and another edition of the Investing Channel. Okay, so by now you probably know that I'm a bit of a pessimist. I think the markets are slightly overvalued. We may well see a correction this year. However, since last week I have been quite pleasantly surprised by three things which have actually made me pause for thought. First thing is US consumer confidence figures are coming in quite strong. Second thing is the US trade-China relations. And also, we're also looking at oil prices, which are also on the increase. So let's start off with oil first. Oil is a very good barometer, very good gauge for what's happening in the economy. When oil prices tend to go up, that's obviously good news because, of course, we're seeing more spending, more expenditure, more investment. However, of course, some countries don't like a high oil price, like the US, because they're net importers, and the OPEC nations, of course, which are net exporters, do like a higher oil price. So what happened this week was Donald Trump tweeted, no surprise there, and he tweeted, and I will quote, "Oil prices getting too high. OPEC, please relax and take it easy. World cannot take a price hike fragile." Now, the tweet itself didn't surprise me. However, what did surprise me is the fact that oil prices fell by 3% immediately after that, which suggests that Donald Trump still has a lot of power in that department. But overall, oil is looking good. The US at the moment are pumping out something like 12 million barrels per day, which is fantastic for them. That's helping to reduce the oil supply. Increase the oil supply, which reduces the price. But OPEC are meeting in April, and of course I'm sure they're going to have a few things up their sleeve which will help them to increase the price. But watch that with some interest. Second thing, US trade-China relations. Now that's obviously been a big cloud hanging over the equity markets for some time, but what has happened, which is some short-term positivity there, is that they've agreed to extend the deadline from March the 1st. So two factors. Number one, it gives a short-term reprieve to equity markets, so people are not concerned now there's going to be a trade war looming immediately. And also it increases the possibility, I would suggest, that there's going to be a long-term resolution, because if there wasn't going to be a resolution, they would have just had their the handbags out now, had their fight, so there's no agreement, and walked away. The fact that they've extended the deal suggests that they might be coming to some sort of resolution. So watch that with some interest. And the third thing, which is probably the biggest factor, is US consumer confidence. Now this was quite interesting because the number for January was 121.7. And the numbers for February expect at 124, but actually the actual number came in at 131.4, which is not just an increase, but a significant increase. And of course, with consumer confidence, again, that's very, very important. It gauges in terms of not only the confidence, but the investment, the spending, and it's a very, very good barometer about the US economy. Now, excuse me, that all said, it doesn't mean that we're out the woods. Now, I may be wrong, and if I am wrong, then of course it won't be the first time. But if I am wrong, I'm also going to be in very good company this week, because Warren Buffett gave a very candid interview on CNBC early this week where he talked about Berkshire Hathaway, his company, overpaying for an investment in Kraft Heinz. Now, the reason he gave the interview was because on Friday, Kraft Heinz, of which Berkshire Hathaway owns 27%, lost, coincidentally, 27%. So that meant that he lost $4.3 billion on Friday. So there you go. If it can happen to the world's best investor, it can happen to us all. Hope you enjoyed that. I'll see you next week, same time, same place.